Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this quick weekend edition, Sunday, July 24th, 2022. Please be sure to subscribe to this channel and tell your friends and neighbors that this is the channel for the pure, unadulterated financial news, straightforward. Appreciate your support. Today is just a quick video about car repossessions on the rise, as well as CEOs of major companies cutting back, getting ready for the layoff season in the fall, as you know, as interest rates and everything jump up and production costs jump up. We're also going to be talking about the wildfires in Europe, and that's going to be the latest economic challenge for Europe, and as long as their production lines and everything that's going on there. So I thank you for joining me. Hope you staying cool in the heat wave for 2/3 of the U.S. country is affected by a heat wave, 82 million people. So prayers and blessings for those who are trying to stay cool for this brief heat wave. And the good news is it'll be over by Monday or Tuesday, so we'll be back to normal temperatures for much of the country. So car repossessions on the rise. Average price hits $47,000. Guys, ladies and gentlemen, you know that used cars prices have been going up for the last year and a half. New car prices are just insane. I mean, I looked at some trucks. I was looking at a truck. I think it was a Chevy Silverado or something, Super Duty. They wanted like $75,000, $80,000 for it. And then the Ford F-150 was, I guess it's the Raptor or something, was coming in like almost 90 grand. So these trucks, are very high, as you know. SUVs are high, used cars are high, and even if you have a used car, the challenge of finding parts sometimes, and if you have to take it to the shop, parts are coming in 2-3 weeks later than the time frame that they're giving you at the store. So at the dealership or at the private car repair shop. So car repos are on the rise. As you know, monthly payments for some of these vehicles over $1,000 easily. If you have a new BMW, a new Lexus, or a new Super Porsche, or whatever it is, your payments can easily go over $1,000 because the average car payment in the United States right now is over $700, as you know, and that's just for basic stuff like Honda, Mazda, Toyota, etc. Nothing crazy luxurious, but the prices on that, you look on the hook for about new car payments are definitely on the rise. And you're looking at these luxury cars, $1,000 or more per month. According to Kelley Blue Book, the average price of a new vehicle rose 13.5% year over year to $47,000 in May. And then record high monthly payments. You can already, it doesn't take a super economist to figure out that things are going to be repo man is going to be very, very busy. And this is in all parts of the country. Most of the time you think, it's only in the deep south or only in the Midwest or all that kind of stuff. No, this is nationwide from the West Coast to Northeast. Repossessions are on the rise. Because, the fact of the matter, the cars is just a depreciating asset. It's there to get us from point A to point B. Of course, you want to have the basics, AC, cruise control, power, this, but, you don't. The luxurious stuff, most people are now cutting out now. They're going back to the basics, and they're turning these cars in, or they're getting repossessed because these loans that they're making on these auto loan payments. And you got to think now, interest rates rise on everything. Okay, the Federal Reserve is coming out with an interest rate meeting on July 27th. They're going to raise interest rates probably 75 basis points, maybe in a full point. So that's going to take car vehicle APR up. You may be paying 10-12% on interest on a car, 14% interest on the new car, and that's just not good. So people are realizing that they're trading it in for Priuses, for electric vehicles, or for something smaller, Civic, something smaller where they can get more gas out of it and things, and that's what's going on there. CNBC.com. CEOs say that they're raising prices, cutting costs as inflation dominates post-earnings conversations. Now, this is in stark contrast to last year when they said they were expanding. Guys like, Elon Musk and Tesla, everybody was saying they were building new plants and expanding out in Texas. Austin, Texas was supposed to be the new Silicon Valley and all these other places that they have. Now the CEO leaders are saying that, quote, our primary response to the environmental challenge of inflation is higher pricing. So we're going to get higher prices and lower wages, stagnating wages, I should say, higher prices, stagnating wages, and we're also going to have layoffs coming because right here, CNBC is already preempting you that once the kids go back to school in September, for some in August, but once September comes and we're in the fall, that means cutting costs. Cutting costs means layoffs and raising prices. They're going to raise the prices on the goods and services that they do have. So higher prices, according to CNBC, haven't hurt profitability, with the results so far countering generally pessimistic attitude heading into the earnings season. But it will hurt profitability in the third season here. As you know, the U.S. economy is deeply entrenched into a recession right now, and it's only going to get worse as we go through the summer months here and into the fall. So of the 91 S&P companies that have reported so far, inflation has been mentioned on 85 of the analyst calls, according to a search by FactSet transcripts. So consumers, we're going to be paying the prices here. Americans, middle class, lower class, we're going to be paying the brunt of the taxes and the brunt of the higher prices and taxes here. CPI index is above 9.1%. I told you that a couple of videos ago that inflation is headed to 10%, and we're only 0.4 away from that right now. So by the middle of next month, we'll be in 10% inflation. Gas prices have come down, but everything else is still high. As you know, food, transportation, taxes is still high. The cost of daycare, the cost of everything is still sky high, despite gas coming down, 5 cents on the average on the gallon, on regular gallon. So guys, we still have major problems. Wildfires in Europe is Reuters.com is saying is the latest economic headache. Those wildfires in UK and Spain, especially out there in Zamora and some of the hill country of Spain and the mountains. The firefighters were taxed. It damaged livelihoods of many across Europe. Climate change has been something that's really going to be a big thing, and the summer wildfires is just a preview of what's going to be happening in the future. And so this is going to be something that we have to look out too. Natural disasters is going to be costing a lot of economies different things too, guys. And so we have to be on the lookout for that too. That's why I say prepare. Get more water. Get more electric solar panels. Get more things of that nature if you can afford to do that, because in the future, climate change and this natural disasters, hurricanes, and all that is only going to increase heading from now to 2030, and that's going to be breaking a lot of economies of a lot of Europe and America and Asia, as they have to put out a lot of money, millions of dollars to deal with this financial calamity. Because these forests contain timber, wood, look at all that stuff that we normally don't think of. It damages the beekeeping operations, the bees that pollinate things. Everything is destroyed here, as this guy has beehives destroyed here in Spain. So the fires in Spain, they spread in France, southwestern France, Gironde, France. So our prayers are with Spain, France, as well as England, the UK, all that area was affected significantly by these fires and high temperatures. So we definitely want to keep them in our prayers and thoughts, and we want to continue to prepare. You guys have a blessed weekend. Thank you for joining me on this episode. I look forward to making more episodes here in the coming week as we get through earnings season, and as the Fed raises those rates on Wednesday is the day that we expect that to happen. Either a 75 basis points or a full basis point could be on the table as they try to catch up with this fire of inflation. Thank you very much. Have a blessed day. God bless.